In a surprising turn of events, the stock market has experienced a historic surge following President Trump's unexpected announcement of a 90-day pause on most tariffs. The S&P 500 soared by 9.5%, marking its largest one-day gain since 2008. The Dow Jones Industrial Average surged nearly 3,000 points, and the Nasdaq Composite jumped over 12%, reflecting renewed investor optimism. In this video, we'll delve into what led to this market rally, the specifics of the tariff pause, and what it means for investors, both short-term and long-term. Welcome back to The Alternative Investor, your trusted source for in-depth market analysis and smart investing strategies. If you find value in content like this, like the video, subscribe to the channel, and turn on notifications so you never miss out. Let us know in the comments, what do you think about this 90-day tariff pause? Markets were tense throughout the first week of April. On April 2nd, President Trump implemented sweeping tariffs, a 10% baseline tariff on all imports, with sharply elevated rates on specific nations, especially China, whose goods faced tariffs exceeding 100%. This triggered volatility across the board. Tech, industrials, and consumer sectors all sold off heavily as fears of a full-blown trade war spooked investors. Top economists like J.P. Morgan's Jamie Dimon warned of possible recession risks if trade tensions continued. Businesses began reconsidering their supply chains and investor sentiment plummeted. Then, on April 9th, everything changed. President Trump took to the podium and announced a 90-day tariff pause for over 75 countries currently negotiating with the U.S. Under this plan, those countries will see their tariffs capped at 10%, down from the initially proposed 25 to 40%. But not all nations were included. China's tariffs were raised to 125%, citing their lack of progress in negotiations and aggressive retaliation. Trump positioned the pause as a strategic move, giving allies room to negotiate while sending a strong message to China. Markets cheered the clarity and softened approach. Wall Street reacted instantly. The S&P 500 gained 9.5%, its best day since the Great Financial Crisis. The Nasdaq shot up 12%, and the Dow jumped nearly 3,000 points, a historic one-day point gain. Investors viewed the pause as a step towards stability and diplomacy. It signaled that the White House was listening to business leaders and open to compromise. Still, analysts warned that this may only be temporary, and the China escalation looms large. Volatility could return fast if talks stall. This 90-day window is crucial. Trade negotiators from Europe, South Korea, Japan, and others are now on the clock to strike deals with the U.S. Favorable outcomes could solidify the rally, but failure could reignite fears. For investors, this is a period of cautious optimism. Expect headlines to drive intraday swings, stay nimble, but look for positioning in companies that benefit from de-escalation. Multinational manufacturers, industrials, and even certain semiconductors could benefit if global supply chains get back on track. Zooming out, this announcement could be the foundation for a new era in U.S. trade policy. If the U.S. succeeds in reshaping trade deals with key partners, it may bring more manufacturing back home, ease geopolitical tension, and bolster economic growth over the long term. However, if this pause fails to produce results, we may see renewed isolation, retaliatory tariffs, and long-term damage to international relations. For investors thinking about the next 3 to 5 years, today's moves are pivotal. We're at a turning point that could either reduce global friction or deepen it. Before this pause, top banks were forecasting a rising risk of recession due to tariffs. Higher input costs, reduced exports, and inflation fears were stacking up. The 90-day pause doesn't solve everything, but it relieves pressure. If negotiations succeed, it could delay or even prevent a recession, especially if business investment rebounds. But failure here could reintroduce full tariffs, and the market might not bounce back as easily next time. Watch consumer confidence, inflation trends, and employment numbers over the next few weeks. They'll tell us if this reprieve is enough to keep the economy expanding. This rally may be a gift. Use it to rebalance and rotate into more resilient holdings. Focus on companies with strong domestic earnings, low debt, and pricing power. Consider dividend payers for stability, and avoid names overly exposed to China until the situation becomes clearer. Stay flexible, watch the headlines, and keep an eye on earnings. The next 90 days could be a roller coaster or a launching pad. Do you think this tariff pause is a game changer, or just a pause before the next storm? Let us know in the comments. Smash that like button if this helped you understand what's really happening. And subscribe to The Alternative Investor for more breakdowns just like this. Want to start investing or add to your portfolio? Grab your free stock from Robinhood with the link in the description. This is Robert with The Alternative Investor, bringing you real-world investing content so you can build wealth with confidence. See you in the next one.